Hi there, good morning. You've tuned into ET now, and this is Buy Now Sell Now with me, Shail D'Souza. Along with me, I have Shrishti Sharma also joining in very shortly. Let's take a look at what the markets are doing at this point in time. We have actually officially entered midweek, and looks like there is no midweek blues, at least hitting the D Street as of now. If you look at the benchmark indices, inching towards the day's highest point, that is the Nifty for you, surpassed the 22,450 level. In fact, trying to knock at the doors of 22,500 as we speak. Talking about the list of losers, the only reason why I'm talking about the list of losers because there's only a handful of losers in a trade today. So if you look at it, the only biggest loser which seeing sharpest cut is Tata Consumer with cuts of about 5%. Apart from that, the next biggest loser is Infosys, which seeing cuts of about 0.4%. So by the look of it, you can imagine what sort of the market breadth is at this point in time, skewed very much in the favor of the gainers. Talking about gainers, then you have Cipla, Hindalco, JSW Steel, Tata Steel, UPL, all of them seeing good gains in trade today, with Cipla being the top gainer on the Nifty. While talking about what the Nifty Bank is doing, moving in tandem with the benchmark indices as we speak. Talking about the small cap index, remember that yesterday the small cap index hit fresh record high levels, and today also it is actually around those levels once again. 0.5% uptick coming in for small cap index. The metal index is the top gainer. When you talk about the sectoral front, so you have Nifty Metal Index, that's the top sectoral gainer. You have Realty Index holding on to good gains. You have also healthcare sector that is holding on to good gains as of now. But on the losing end, it's just the IT sector that's taking it a bit easy, along with the PSU banking space, and also FMCG is nudging those negative territories. Only one of the key reasons has to be because of Tata Consumer and what sort of a reaction that particular counter has seen in trade today. So that's the way how the markets are looking like at this point in time. I have Shrishti also joining in right now. And Shrishti, I definitely have to also put the spotlight on the entire pharma space, because there are no doubt you have Cipla, that is the top gainer in the pharma pack. But you have new specific information when it comes to Zydus Life, Lupin as well. Zydus especially, they also had a Form 483 for one of their manufacturing facilities, isn't it?
Well, yes, Form 483 has been issued to one of their key facilities with 10 observations, and this is one of the reasons that we are seeing cuts on Zydus Life. But if we talk about Lupin, then you will remember just a couple of days back, both of these companies have got an approval to launch one of their drugs. They had an approval already, but they also said that they will be launching the 25 milligram strength of one of the drug which is used for overactive bladder, and this was supposed to be a big opportunity drug only for Lupin as well as for Zydus as well, and we have seen positive reaction on both the counters. But for today, what we are gathering from our sources is that the parent company of the drug that we are talking about has actually gone ahead, and from US court they have got an approval for a temporary halt to the launch of these particular drugs, and this is indeed a negative news flow for Lupin as well as for Zydus Life Sciences as well. So on back of that, both of these pharma majors are in focus. Sharon.
Absolutely, Shrishti. That is pharma sector, why they're in focus. But let's not lose sight of what's exactly happening with the Birla group of counters, because they have actually seen a massive re-rating of sorts when it talk about, be it Aditya Birla Capital, be it even AB Money, or for the matter of fact ABFRL, Vodafone Idea. How can you lose sight of that one? Grasim, Hindalco, all of them have been in focus. But what exactly is happening in Birla Group? Why such a re-rating? Why such a renewed vigor coming in that group counters? I have Ajay Sharma, who tracks the entire group very closely, to talk about this. And Ajay, yes, it's actually you have to rub your eyes to see what exactly happened over the last 1 month. Spectacular gains, but this is not only 1 month story.
So I'll tell you what, guys, so it may have got into focus in the last 1 week or month. Yeah. But actually, I'll take the clock back, and if you remember, about 6 months back, Mr. Birla gave out a speech saying that India is now going to witness a Capex Mahakumbh. That kind of commentary came in. I took up and took notice of that commentary, because Mr. Birla kind of in the last 6 months to 1 year you're seeing a very vocal Mr. Birla. Right. And the group seemed to have gotten massively aggressive. Then you talk about novelist IPO plans coming in. The speech which was given, in fact, almost guidance of 10,000 crore revenue in a profitable position when paints division was being launched in Grasim, all the way somewhere in Punjab. Yeah. Every time you see some commentary coming in, this Recently, the way they want to add consumers in their AB Capital business, which is along with Vishakha Mule. So all the businesses have got some kind of a mojo back. There are very specific plans for cement. Just yesterday, just 2 days back, there was a press release, which 185 metric ton kind of targets being set. So there is, and market is taking notice of this. Market is very smart, right? They are way ahead of everybody else. They exactly know that this group leadership has got, massive focus back. There's a lot of fresh, renewed vigor, as you just said. All the businesses are firing, and guess what? Valuations are not very steep. If you compare ABFRL to Trent, you'll find massive valuation difference. You see cement business, they are the biggest, cement players. And guess what? Data shows that cement prices in India have not gone up for over 10 years. Inflation everywhere is there, but cement prices are because of overcapacities. So all the businesses are kind of very fairly value, AB Capital inclusive. And now market is taking notice of that, and then the trigger point of turning around of Vodafone. Exactly. People almost wrote it off. So when that capital raising happened, people just latched onto it, and this now people are taking notice of that and finding investing opportunities there. So that is what the big re-rating of Vodafone, not only Vodafone, but the entire group.
Exactly, re-rating of sorts. And also you've also forgot to touch upon the fact that Mr. Birla and also the entire group entities, while they launched the paint business, also spoke about the fact that they want to get into retail jewelry business as well.
Yeah, I mean, well, retail jewelry, there's only Big Dada or Titan out there. So, retail jewelry, very good, you reminded on that. What is happening is that this group now wants to go in B2C or actually go deeper into B2C. Paints is a consumer business. Jewelry is a consumer business. The commentary in AB Capital on going dealer, from a wholesale lender to retail lender, consumer business. And then, of course, we know ABFRL is a consumer business. So the tilt is now from B2B going towards B2C. That's a very valid point. All right.
And also the fact that what has happened with Vodafone Idea as well, right? We've been hearing the fundraise, and now it's happened. And what sort of an oversubscription number actually coming in for Vodafone Idea?
18,000 crore FPO, India's largest so far. Overall subscribed 7 times or 6 times is no mean feat. You're talking about 1.5 lakh crore demand coming in. So from completely untouchable to most loved, that's the kind of swing which happened in change of sentiment. And well, there are reasons also. There is a impending tariff hike coming in. There is big growth capex. In fact, the management told us clearly how this money will be utilized for growth. And people are now of the view that even the government perhaps wants 3 to 4 player market, not a 2-player market. And that is not good for the country and not for the consumers. And that is why perhaps, so clearly everything coming together for them.
Absolutely, everything coming together for the Birla group of entities, and a lot of them are touting that this is just the start of the re-rating for the dominance or consolidation coming in.
The recent reports clearly seem to be suggesting it's a start.
And all of these brokerages are going ahead and re-rating. Case in point being ABFRL, a lot of these brokerages have come. Macquarie has upgraded AB Capital as well, and we have seen great moves on that counter. Yeah,
that's correct. I mean, in fact, Nuvama also put out a report this morning on telecom. So all the businesses are witnessing upgrades and reports coming.
And it's not only Birla group of companies, but all thanks to Birla group of companies, even Industar's got an upgrade coming in from CLSA.
Telecom sector is in a buzz.
Exactly. So thank you so much, Ajay, for putting into context what's exactly happening with the Birla group of counters, the consolidation that is happening there, and also the commentary coming in from each of the companies. It's nothing short of actually being astonished with the fact that the re-rating the companies have seen. AB Money is locked in upper circuit once again today. You have Aditya Birla Capital that's seen a good up move, not just on a daily basis, but over a course of at least 6 months or so. If you see, these counters have performed well. But what should you do? Which is that Birla group of company that you should actually lay your bet on? Let's bring on board our experts today. We have Foram Chheda joining us on the technicals, while on the fundamentals, we have Lancelot Dcunha joining us. Very good morning to you, Lancelot and Foram. Thank you so much for joining us on Buy Now, Sell Now. And yes, you did hear that commentary coming in from Ajay actually to tell us what's exactly happening with the Birla group of counters, Lancelot. And exactly like he said, it's not just a 1 month or a 2 month story. This has been building up for the last 6 to 7 months, where you also had them talk about capacity expansion coming in for the cement player of cement companies, or Novelis IPO, launching the paint business finally, and also what is exactly happening with AB Capital domain of the business as well. Which of the companies in the Birla group of counters are you liking right now? And also, is Vodafone now making to your list?
So I think, Ultratech, Michelle, is one of the companies that has been in my list for a while. It is one of the most efficient manufacturers of cement with the lowest cost of production per ton. And given that they have been steadily increasing their capacities, even though there is a overcapacity, you've not seen any major price deterioration despite the increased competition in the space. So I think that is, and India is in a long-term, growth story as far as cement is concerned, because of the kind of build out that we are going to see over the next 5 to 6 years on the infrastructure side, as well as, real estate has again started to pick up. So that will again further boost the demand for cement. So I would look at, this as definitely a opportunity to, buy in, and if there are any declines, to accumulate the stock for a long-term, great run. The other space that is looking very interesting in terms of valuations is their financial services space. That is the Aditya Birla Capital and Aditya Birla Money. Now, here what has happened is there was this overhang that there may be a potential, movement of money in order to support Vodafone or support the investment in Vodafone. And given that now you are seeing Vodafone have ability to raise money on its own, that overhang is now out of the reckoning as far as the valuations are concerned. And that is giving a good boost to the re-rating of the stock. As far as the underlying businesses are concerned, all the businesses are growing well. In Aditya Birla Capital, they have the life insurance business, you've got the financial services business and the asset management business. All these three businesses have been growing, and given the economic growth that we are going to see over the next couple of years, you will see significant upside even on these companies, because the valuations as compared to the other companies had really become relatively cheaper, much cheaper than the others. So this is an opportunity where you will see, if one looks at investment over the next 2 to 3 years, one can get significant returns from these two stocks.
All right, those are the top recommendations coming in from Lancelot. But Foram, coming to you. Hi, very good morning, and thank you so much for your time. A lot of these technical experts have been tracking majorly the AB group of counters, be it AB Capital, AB FRL, all of these showing breakouts. But at this point in time, when we are seeing the whole group performing so very well, fundamentally, a lot of these things are changing now. So which stocks does stand out for you? Other than that, if we not just have to take a technical bet for the short term, but for the long term, any big targets that you have on any of the counters from the group?
Oh, well, hi, good morning, and thank you for having me on the show. Well, as you rightly made a mention, the entire group is performing very well. Even on the technical grounds, a lot of short-term trading ideas have been recommended by a lot of analysts, and in fact, it's trending very well. I have shortlisted from my end is Grasim Industries. Overall, the stock has been doing well. If you look at the past 6 months also, I think in November, the stock price was closer to a level of around 2,000, 2,100, and it was in a consolidation for the next 3 months in a range between 2035 to around 2170. It was in this range, and finally we saw a good breakout in the month of February, and the stock price saw a good rally, and this consistent rally went up to 2,300 levels, where currently the stock price is. So we've seen a very good rally, almost 17% up from the lows of around 2,035 levels. Even if you consider it from the breakout level of around 2170, it is almost like a 9 to 10% gain. So overall, the stock is trending up well and with decent returns, and it's been consistent and gradual. So I'm picking up technically this stock, and currently yesterday also we saw a very good rally of almost stock price was up by 3.5 to 4%, and today it is marginally up in the green by closer to around 0.25%. But I would suggest that if the stock price is retracing back again to a bit of a breakout level, that is closer to a level of around 2,300 to 2,200, 2,300 to 2,320 levels, that becomes a buying zone. As far as the volumes are concerned, there is a tremendous increase in volume. So overall, it is supporting the bullishness. And even the RSI, like an indicator, is very much in sync. It's not indicating any negative divergence. So overall, I'm bullish, and I'm looking for a higher target of closer to around 2,700.
All right, so that is Grasim actually that is making to Forum's list, and with that we'll actually slip into a break on this edition of Buy Now Sell Now. But here the quick reminder for all of our viewers who are tuned in right now. Remember that today is the women's special edition of Buy Now Sell Now, where we will be taking queries coming in from all of our women investors, all of our women viewers who tune in and day out. We will be prioritizing their queries today. So yes, all of them who are tuned in right now, start writing to us on the WhatsApp number flashing on your screen, and we'll be back after the break to take your queries. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. And today is the 4th Wednesday of the month, which means it is a women's special edition of Buy Now Sell Now, where we'll be taking queries coming in from all of our women investors. And yes, we have a lot of them pouring in, where our other viewers are actually writing on behalf of their mother or sister, or even for the matter of fact, wife or their daughters. No problem, we will be taking your queries as well. But let me kickstart with the queries already pouring in. This one is from Prashanti, writing to us all the way from Sydney. And she wants to know, is it advisable for a fresh entry into persistent systems? She's saying that she wants an entry level on the technical front for 1 to 2 year time frame. Forum, what's your take coming in on persistent systems? No doubt this one took a huge knock after his earnings, on back of his earnings. But technically, you think this price is the right price now to enter into persistent for a period of 1 to 2 years at least?
Technically speaking, the stock price has been clearly in a down move from 4,450 levels since Feb. So as of right now, there are no bullish signs on the technical front to give as a buy call. However, one needs to just wait the stock price, if it stabilizes near 3,300 levels and shows a bit of a turnaround. That's where one can look for an initial entry of just investing nearly 20 to 25%. But otherwise, I would suggest to wait.
All right, that's the take coming in on persistent. Moving on to the next one, and the next query that I have, Forum is on Ratnamani Metals, and Mrs. Sarojini has bought 20 shares at a price of 3,000 rupees. Is that a hold or sell at this point in time? What will be your advice?
I would suggest it's a hold. Currently, the stock price is just near its support level, near the 200-day moving average. So it's absolutely okay to hold on to it. But a strict stop loss should be placed below the levels of 2,800. And she can expect in the next, say, around 1 to 2 months, upside target of closer to 3,150.
Coming to you, this one is coming from Renu, who's writing to us all the way from Trivandrum, and wants to know about Cochin Shipyard. Bought about 200 shares at a price of 860 rupees per share. Do you think that Cochin Shipyard is her hold right now, or do you think that she should look to book out profits in this one?
So I think, given that they have received good orders and there is good traction, you will see the profits grow for Cochin Shipyard. The only question is that the stock has risen, significantly in the last 1 year, and valuations are, stretched. So in that sense, from a short-term perspective, one can look at doing some profit booking and then maybe re-enter if there's a correction. But if you are a long-term investor, then you can continue to remain invested, because fundamentally you will see earnings grow and then valuations will become reasonable again, and then again further you'll see growth in earnings coming forward.
All right, Forum, the next query is from Anusha, and she wants to know, is this a right time to buy Triveni turbine for the short to medium term?
Actually, we've already seen a very good rally in Triveni turbine, and in fact, since Feb, the stock has been doing fantastically well. So from those levels of around 350, the stock price will move to 560. It's retraced, so she can look at buying a small quantity, but if it comes down or retraces, I would say, closer to a level of around 510, she can look at adding it even more. A strict stop loss should be placed below the levels of around 520. And initially, she can expect an upside target of closer to 575. Once we see a breakout from that resistance of 575, she can expect a higher target of closer to 600.
All right, this was coming from Smita Vikram, who's writing to us from Bangalore. Lancelot, she has Coffee Day in her portfolio. She purchased at a price of around 39.27 rupees per share. She wants to know whether she should continue to hold on to this counter for some more time or look to exit. Looking at the buy price, looks at an attractive price is where she got into Coffee Day. And let's not forget that this one also has been a kind of a turnaround story after it hit a very rough patch, isn't it?
Well, I think, given that the acquisition price is low and also that the stock has, done very well from that acquisition price, and considering that, from a fundamental perspective, the company has a lot of issues still to address. It needs to raise further working capital in order to, refurbish a lot of its stores. And on the other front, they have some part of the debt still to be repaid. So it's going to be in a period of, maybe the next 3 to 5 years going to be a period where there will be financial consolidation. And that financial consolidation is not going to immediately generate high return ratios either on capital or on the earnings front. So I would say that it's better to book profits, and you have other companies where you can see earnings growth and where valuations are reasonable. In such companies, one can always reinvest for purchase.
All right, Lancelot, once again a query for you. This one is from Neeta Jaswani, and she has query on two counters. Firstly is Relicare Enterprise. She is holding over 100 shares at a price of 236 rupees. And the other one is Clean Sign Technologies, holder of 50 shares with a price of 1385 rupees. On Relicare Enterprises, she's almost at a cost, and similar is the case with mild losses in Clean Signs actually. What will be your advice in both of these names?
In case of Religare, the idea of Religare would have been a good acquisition because there was a change in management and there was a possibility that new management could bring in, fresh funds, and that could, change the outlook for the business. But at this point in time, there are a lot of companies which are fairly valued and lower priced in terms of valuation and yet offer better upside than Religare. So it may be worthwhile, exiting from Religare at this point in time and looking at much stronger brands and stronger companies who are, in the same similar valuation levels. As far as Clean Science Technology is concerned, I think there is an opportunity there to, remain invested or even hold on, because while we've seen a decline, I think the business of the company is cyclical, but the cycle is going to bottom out in the next 2 to 3 quarters, and then you should start seeing an up move as far as the earnings are concerned, and then that would result in re-rating. So if one has a, let's say, 1 to 2 year time frame, then you can look at holding on or even adding at lower levels Clean Science and Technology to the portfolio.
Right, this one is coming in from Neha. She has a Vedanta at a price of 275 rupees per share Forum, as well as Yes Bank at 20 rupees per share. She's saying that she's making good profits in both of these counters, but wants a technical as well as fundamental view and a medium-term, short and medium-term target for these counters. What should she do right now? Vedanta and Yes Bank, luckily she's made good set of profits if you look at the buy price or acquisition price for them. First, Forum, what's your take on the technical front? What sort of a target she can look at for both of these counters for the period of 3 to 6 months? And then Lancelot, I'll come to you to ask about fundamentals, and does it even make sense to stay put with them given the fact she's already making profits? Forum, you go first.
As far as Vedanta is concerned, so since the acquisition price is really nice, she can continue to hold on to it for the next 3 to 6 months as well. It is advisable for her to maintain a strict stop loss below the levels of 360. Rather, I would put it as a trailing stop loss below 360. And she can, in fact, look for a higher target. So initial higher targets are closer to around 420 to around 425. So that's why she can consider booking partial profits and hold on to the balance. And the next stock is on Yes Bank. Now, that's a good thing that she's making a profit there as well. However, on a near-term basis or from a trading perspective, I would suggest that she could switch. But if she's looking from a long-term perspective, she's okay to hold on for more than a year, then it is fine to hold on and look for a higher target back again to those levels of 32, which were marked, I think, in the month of Feb. Otherwise, from a trading perspective, I think she can look at switching from the stock.
All right, so that's the view coming in on the technical front, both on Vedanta as well as Yes Bank. But what's your take on fundamentals, Lancelot? Do you think that advisable to stay put with both of these counters, even if for the period of about 6 months or 1 year?
So, Cheryl, Vedanta is basically in the metal space, and metals are global commodities. The entire demand scenario as well as the pricing scenario depends on how the global, growth is going to play out, as well as production facilities from countries like China and how they reach the marketplace. So that having said that, it's we are at a situation where the prices of global commodities have improved, and there was a situation where the production from China was on the downturn, which meant that the demand outlook, even though it's weak, the pricing is not likely to fall for a while, and that has seen, but the stock has already factored all these positives in, and we have seen a very large move thereafter. So now at this point in time, to look at buying into the stock, the valuations are a little bit on the higher side, so one should avoid looking at investing at these levels. And if you have made significant profit, I think there is opportunity to book profit and look for opportunities, other opportunities where valuations are reasonable. So as far as Vedanta are concerned, this you can look at this. As far as Yes Bank is concerned, Yes Bank also has given good returns over the last 6 months. And if you consider the valuations and look at the strength of Yes Bank as compared to somebody like an HDFC Bank, which hasn't really given that kind of returns, I think there's an opportunity to trade out and move into a fundamentally stronger bank where valuations are low, because you get a good quality company at a much lower price. And as the as the re-rating happens, one will see benefits on that side. So even on Yes Bank, I would say that there's an opportunity to cash out and look for other reasonably valued opportunities.
All right, that's the take coming in on Yes Bank. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now, Sell Now show, where we get you answers for all your stock-related queries. And today we are catering to all the queries that our women viewers and investors are sharing with us. And continuing the same, Lancelot, coming to you for the next query. This one is from Samya from Kolkata. She says that she has bought Tata Technologies at a price of 1,277 rupees. What's the take coming in on this counter? Should she continue to hold on? And if yes, then any target price you can share, that will be helpful.
Tata Technologies actually was, it came out as an IPO. There's a lot of demand, and the prices really went up for that stock post IPO. And that's why, you saw the high levels of 1,285, 1,300 levels. However, one should definitely consider this to be part of a longer term portfolio, because Tata Technologies is in an engineering space, engineering software space, which is dominated by highly technical companies, and that should augur well for having a company in that space in your portfolio. So given that the stock has corrected, there may be a bit more further correction on the downside as far as the price action is concerned. But valuations around 950 would be a reasonably good valuation to look to add the stock to your portfolio. So if it's 950 or lower, one should look at accumulating the stock. There is a bit of negative overhang considering that globally most of the IT companies have indicated lower revenue guidance for 2025, and that is something that would be needs to get factored in the valuations when we actually know how the future is playing out for the company's growth.
Coming back to you, no doubt we have Janvi, who's writing to us of Bangalore, directed this query to Forum, but her question is based on investment perspective. She's holding PB Fintech at a price of 1190 rupees per share. She's been holding on to this counter for the last 2.5 years. The stock has not done much, and she's now actually started making money or some sort of money when it comes to PB Fintech. She wants to know whether she should look to now exit the counter with the mild bit of profits and look to invest their money in renewable energy space as a whole, and also which stock, if you advise that she should switch, which stock in renewable energy space would you advise that she put some money into?
Cheryl, what happens is that PB Fintech, is basically a technology platform for life insurance and general insurance, selling. Now, that business grows well, but there has been, various, let's say, expenditure in terms of advertising, in terms of getting customers to move from a physical mode into the platform mode. And hence the company is still not making profits even at the net profit level. So while valuations have gone up, this is like a long-term business opportunity where once there is a significant traction to online purchasing of insurance policies, then you will start to see, the company generate profits, and then it will justify its valuation. So if you're already making money in this space, I think one should, try to book profits and look at alternative spaces that are going to grow. Now, when you look at renewable energy, I think most of the companies in that space have already risen significantly. So companies like, say, Sterling and Wilson Renewable Energy, you have the Inox, the renewable energy. Now, all these have moved up significantly. So I think from a perspective, one has to wait for a correction and then only look at when valuations will become reasonable, because finally it is valuation that's going to drive the future growth and performance. And if your entry level or your acquisition cost is at a high level, you cannot generate high returns from there. So it's better to wait instead of putting money directly into the renewable energy space, because at the moment valuations have run up mainly on expectations. Once we see some market correction, you could see a sell-off in some of these stocks, or as the sector rotation happens, you could see some amount of correction. That's the time to look to accumulate. I would actually look at, a company, even Tata Power is a good opportunity where they are moving a large amount of their capacity into renewable energy space. And they could list the renewable energy subsidiary separately, which could lead to some kind of unlocking in terms of valuation. That's a possibility. So even Tata Power can be a good option to look at, but definitely there needs to be some correction in price before one can buy in. If you do buy in, then your returns cannot be that high.
Coming in on a lot of stocks that are related to the energy space, but to wait out for some dips for a fresh entry. But moving on, and Foram, the next query is from Fabiola, and she's holding 2 counters and wants a short-term view on both of these names. Firstly is Jupiter Wagon. She's holding close to 250 counters, 250 stocks from a price of 377 rupees. That's the first stock she has in her portfolio. And the other one is SAIL. All these metal counters are rocking today, and Fabiola is holding 330 shares from a price of 150 rupees. What's the short-term view in both of these names, Foram?
Well, to begin with on Jupiter Wagons, now one is a stock overall is in consolidation since the month of Feb. In fact, technically speaking, it is formed like an inverted head and shoulder, and the neckline or the resistance, I would say, is near 405. The moment we see a breakout from those levels of 405, we can expect a higher target of closer to around 440, which also coincide with its nearly previous highs in the month of Jan. So I would suggest her to hold on to it even for the near term, or she can look at 1 to 2 months of holding. She can trail her stop loss to closer to a level of around 370. And I would just suggest her to look out for a target of closer to 440 on the upside. And the next is on the SAIL. So since her cost price is close to 150, so currently it is trending up higher. It's broken out from its previous high of 157 as well. So she can continue to hold on to it, because the overall formations of this stock is formations of higher tops and higher bottom. As far as the volumes are concerned, there is a good increase in volume supporting the bullishness. So overall, the stock is good. She can continue to hold on to it, look for a higher target of closer to 170, and she can maintain a stop loss to her cost price.
All right, coming to you once again, Foram then. This one is coming in from Lakshmi, who has Tata Motors at an average price of 400 rupees per share. About 100 shares of Tata Motors is what she has in a portfolio. She's been holding on to this for a year or so, making spectacular returns on this one. What should she do now? Book out profits or stay put with Tata Motors for some more time?
I think she can stay put for some more time. Now, overall, the stock has now moved into a consolidation. Now, the consolidation range is much, I would say, more broad. Like on the higher side, it's 1040, and on the lower side, it's 940. So it's almost, I would say, like 100 points of this price range. So she can continue to hold on to it. And in fact, once we see that it's taken off those levels of 1040, she can expect some more upside closer to 1100. So she needs to stay put for some time, and and then she may see some momentum coming in back again.
Lancelot, the next query that I have is from Rashmi Vinod from Bangalore. She's holding 800 shares of BSC and her buy price is just 450 rupees. At this point in time, given the strong run-up in the counter, is that a hold at this point, or maybe she can look out to book some profits right out here?
I think she can look at holding on to this because, exchanges are going to grow and turnover grows and exchanges make money. Their infrastructure is remaining more or less fixed. The capex is not significantly higher. And, while there was a short-term move that NSE has now made some changes in the F&O transaction charges to try and get some market share back, I think over a longer period, both the exchanges will do well and, will justify the valuations that you're seeing. So going forward also, one should remain invested in the exchanges.
Right, this one is coming in from Nitya, who's writing to us from Chennai. 2,500 shares of Vodafone Idea at a price of 13.75 rupees per share, as well as 300 shares of IOC at a price of 175 rupees per share. She wants to know whether she should or what the strategy should be for the next 3 months. Foram, I know you diced, you actually dodged, not diced, you dodged Vodafone Idea while we spoke about the Birla group of counters, but we actually have a lot of queries coming in today on Vodafone Idea in particular, given the fact that what they have managed successfully to raise that fund via the FPO as well. So Vodafone Idea for the next 3 months, what's your outlook? No doubt the buy price is a bit elevated for Vodafone Idea, 13.75 rupees per share, and IOC at 175. What's your take?
One idea, I'll just talk about more from a longer term perspective. Now, one is technically it has made a top at around 18 rupees, 18.25. And so we saw that it was more like a double top because it attempted in Jan and then again it did the same thing in the month of Feb. After that, it's come down back again to those levels of 12.5 rupees. So because now we've seen some momentum coming in, a lot of good volume coming in, we can expect the stock price to retest those levels of 18 until and unless we do not see the stock price taking off or breaking out from those 18 levels, which is right now acting as a very strong resistance level. We may expect more like a consolidated move. Once we see those 18 levels crossing, then on the longer term time frame, I would say that we can expect a higher target. Initial higher targets even move up to around 22 to 23 rupees. But for now, I would suggest that it can be capped near 18. My only thing is that if it takes off 18, then we can expect some bullish momentum. And on IOC, IOC again is on a daily chart has been more like a consolidated move, more sidewards. And even from a short-term perspective, it needs to take off 175 levels. If we see those levels taking off, we can expect a higher target of closer to 190. Till then, a stop loss can be maintained below the levels of 160.
All right, moving on to the next query. And Lancelot, the next query is coming from Miss Vyoma Thakur from Mumbai, and she's holding 2 counters. Firstly is Hindustan Motors, where she bought around, where actually her dad bought around 2,000 shares 10 years back, and the buy price is 24 rupees. What we are seeing is that even after holding for 10 long years, this stock hasn't given great returns to him. So what to do in this counter? And she also has BEL in her portfolio holding 600 shares at a price of 113 rupees. So what to do in this one as well, given the fact that all these PSUs name are doing pretty well? Can she go ahead and add more of BEL?
As far as Hindustan Motors is concerned, I think one should be happy that you've made some money and exit when the going is good. So that's what one can do for Hindustan Motors. As far as BEL is concerned, while it is a PSU, it is engaged in the defense sector, providing electronics, radar for the avionics, also for fighter jets, as well as for various defense purposes. So I think given the large spate of orders that they have received, the kind of growth potential that you are seeing in the orders for BEL, one should stay invested and maybe even look to accumulate further, because BEL can give significant growth in their profits over the next 2 to 3 years, and that's something which one should look at accumulating.
This one is coming in from Anu, who's writing to us from Gurgaon. Forum wants to know about Engineers India, which she's holding up from the levels of 233 rupees per share. She has 2,000 shares of Shalimar Paints as well at the price of 178 rupees per share. She wants to know what to do in the medium term, with short to medium term, with both of these counters. Both of them, she's suffering mild bit of losses.
As far as Engineers India is concerned, we've seen a bit of a decent correction. Like from those levels of 270, the stock price corrected and moved down to around 170 levels. Now the stock is now seeing a bit of an improvement, or it's picking up some kind of a gradual up move. However, now from these levels, currently it's taking support at 200 to around 203 levels, which coincides with a 100-day moving average. And right now it is trading between 50-day and 100-day. So it's very much consolidating. From a medium-term perspective, she can expect around 230 levels on the upside, which may act like a resistance for the around 2 to 3 month time horizon. And as far as her stop loss is concerned, she can maintain a stop loss below the levels of 198. And in Shalimar Paints, in fact, the stock price has seen a deep cut, like from those levels of 224 in the month of Jan. It's corrected and come down to around 150. So that's quite a steep fall. I would suggest that probably she can switch from this stock and get into an alternative, or she can look into a different space as well altogether. But clearly, so Shalimar Paints is a switch.
All right, but with this, it's once again time to slip into a very short break. Don't go anywhere. As we come right back, it's the last leg of the queries section, and we will take all your queries in the rapid fire session as well. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and this is the last leg of the Women's Special Show. So let's try and take as many queries as possible. This one is coming from Mahalakshmi, who is a long-term investor. Lancelot, 60 shares of Bajaj Finance. She's been holding for over 20 months now. Average price is 6,800 rupees per share. Given the fact the stock has not been doing that much, or the appreciation is less, she wants to know whether she should look to exit this one, invest that amount instead in Jio Financial or Poonawalla FinCorp. What's your take coming in on that? Do you think this is a good strategy? Sell out from Bajaj Finance, put their money in Jio Finance or Poonawalla?
Not a good strategy to sell out, because, while Bajaj Finance has not done well in the short term, it is a company that will continue to compound its growth over a period of time. If you look at their book, their book has been growing at almost 15% year on year. Profits have been growing. They've recently launched a platform and an app on which they are providing finance to people instantly. When they go to purchase stuff, they can take finance immediately. So I think in terms of growth potential, Bajaj Finance will show a significant growth. Yes, there have been, issues as far as interest rates are concerned, so the cost of funds have moved up. But from the next 2 to 3 years perspective, one should definitely look at Bajaj Finance as a good quality portfolio stock to keep adding to your portfolio and building the quantity there. As far as Jio Finance and Poonawalla are concerned, they are more shorter term opportunities. They have risen with momentum. So from a valuation perspective, it makes sense to stay with Bajaj. But if one doesn't have a long outlook, but you're looking at short-term momentum, then yes, Poonawalla and Jio would give you the short-term momentum plays.
All right, that's the take on Poonawalla FinCorp. But Lancelot, once again coming to you quickly, if you can share your take on two counters, that is Easy My Trip as well as Patel Engineering. The reason why I'm asking you is Maushami is a long-term investor who has written to us probably for the first time, and now she wants to know, are these good bet for long-term? And if you still like those counters but not the price point, then any price point that you can suggest her for a fresh entry in any of these names. Her investment horizon is 3 years.
So just the Easy Trip, there is a lot of competition in this space because, it's an online business and there are some global players which are in the space which will compete with them. And so attracting new customers to keep using their platform for their transactions becomes a challenge. So given that the stock has done well over the last couple of months, one can look at, booking profits from this counter, and maybe when valuations come off or if there's any significant correction in the stock prices, from a long-term perspective, one can look at it that yes, the business model will grow over a period of time. as more and more people move from offline to online transactions. So that can be looked at only when the valuations are low. As far as the other company was, I just missed the name of the company again. What
Lancelot?
was like? Yeah, Patel Engineering. Yes. So Patel Engineering, I think, is a good engineering company, and one should stay invested in this company because of the kind of growth that we are seeing in the capital goods space, as well as in the engineering space. I think Patel Engineering will provide you significant returns, given that their order book has been improving and the outlook for the industry also remains strong. So one should look at holding on to Patel Engineering.
Right. All right. Namita, sorry, I beg your pardon. Forum coming to you with Namita's query. And Namita has a list of stocks. One is Orient Cement, Ashiana Housing, Taj GVK, as well as Amara Raja. Out of these four counters, which is the one or two counter that she can actually look to buy right now, which is looking attractive to you right now?
I think Taj GVK is a better stock to be in. Now, one is it's into a consolidation and it is in like a buying zone. So the stock price is moving above multiple important moving averages. So absolutely okay. The trend is up. Formations of higher tops and higher bottoms, and it's quite stable. So currently the stock price at 372. So she can look at buying around 50% of the total quantity that she's looking at to buy at current levels. She can add on if the stock price retraces closer to around 360 to 362 levels. Maintain a very strict tight stop loss below the levels of 350. And she can expect a higher target of closer to around 403 to 405. So from a risk reward perspective, it's quite suitable. And I think hence Taj GVK will be a good buy.
Moving on to the next query on Lancelot, I'm going to share 5 names with you where Swati, amongst these 5, looking to pick up 3 counters for a long-term investment. The names are Cafesite Infra, Torrent Power, Balaji Amines, Aster DM and Tejas Network. Just the names amongst these 5, any 3 top bets from you?
Balaji Amines is one which can be added. Tejas Networks definitely can be looked at, accumulated for the long term. And you can look at Torrent Power. So these 3 should see good traction in the long run, as all of them have good, good future outlook as far as their revenue and profit growth is concerned.
So that is the 3 bets coming in from Lancelot. And in fact, we're totally timed out on this special edition of Women's Special on Buy Now Sell Now. Thank you so much, Forum, as well as Lancelot, for joining us and sharing all of your views with our viewers. And with that, we are out of time on this edition of Buy Now Sell Now. It's a goodbye from Shrishti. I will be continuing on for Markets at Noon with Ajay Sharma. Don't go anywhere.
If you like this video, then like, share and subscribe to ET Now.